There
Hey
you go.
there, this is Tracie Schmidt with the Schmidt team at Supreme Lending, and I am here with the amazing Heather Jones. Heather,
Hi,
how are you?
Tracy. I'm good. How are you?
Good. I'm so glad that you wanted to have this call to get some information out to your market and to buyers and sellers and kind of just educate people on what's going on in the market. So start out just by telling everybody a little bit about yourself and the market you work and some information.
Yeah, absolutely. And thank you so much for doing this call with me. So I'm Heather Jones from eXp Realty and Heather Jones Real Estate. I serve Corona, California primarily, but really all of Riverside County, most of the Inland Empire. My primary focus is Corona. I live here, I work here, I play here. My kids go to school here. So Corona is home. And but I'll go wherever my clients take me, especially in the Inland Empire. That's my kind of bread and butter there.
That's awesome. And everybody, I mean, as a mortgage lender, I don't really know the stats of inventory and houses in specific markets. So that's really a question that I get a lot is, what does inventory look like? And I don't know for like your market, do you have any numbers that you can share of maybe the number of homes listed or anything like that?
Yeah, so I was just looking earlier today, actually, in Corona. There are 204 homes on the market total.
Okay.
This is active homes or coming soons.
Okay.
And this includes single family residences, condos, and townhomes.
Wow.
Yeah, so numbers are increasing, actually. Inventory is increasing.
There are houses, so that's a great thing.
Yes. And then in terms of price point in Corona, average price points have gone up. The median price point of a home here in Corona has increased over the last couple of years. So there are only 2 homes available right now under $500,000.
Okay.
And if we kind of look at loan limits with, the conventional loan limits of 647 to 95, I believe it is.
647 too. You're so close.
Yes, too. There are 46 single family homes, condos, and townhomes that are priced under 680, which when we do the math, 680 price point with a 5% down payment will get you right in the appropriate loan limits.
Okay, so there's some inventory out there. So
some inventory and more obviously coming soon.
Okay, so I just drilled you a little bit. So you asked me a question that you get from people about mortgages.
Yeah, so I mean, primarily right now, my biggest thing with people that I talk to, the general public, is what's happening with the market. It's going to crash. We're approaching a recession. These prices are just too high to sustain. So can you kind of speak to that?
Yeah, I mean, I actually met with a client today and they were saying the biggest mistake they made is they didn't buy last year, right? And I really feel like these same people a year from now are going to say the biggest mistake I made is they didn't buy now. And so I was actually, I worked for Countrywide Home Loans at the time in the 2007, 2008. I was a branch manager. I had 30 loan officers, and it was the time of 500 credit scores, stated income, neg-am loans, and the branch shut down and I had to lay off 30 people. And it was like one of the hardest times, right? But the reason that happened is because not only were the qualifications different then, but it was because they didn't have equity, right? So not only right now are people qualifying with high FICO scores, down payment, they have a ton of equity, right? So they're not going to be able to foreclose on a home that has equity. So I think we're just in a completely different time. Now, if you talk about inflation and things like that and things going on in the world and the economy and things still not being shipped because of COVID and all of those things change, right? But as far as the housing market, they're still projecting appreciation and they're still projecting interest rates continuing to go up. And we'll kind of look at some charts and stuff that I can share with you to share with people. But I don't have a crystal ball. If I did, I'd be a bazillionaire in this.
Right.
But the calls that we're on, it does not sound like there's any type of like bubble bursting or I feel like it's the news and the media, or I don't know. I don't know what, or maybe it's fear, maybe people are just doubtful and fearful and not ready. And maybe that's the reasoning they're giving. I'm not sure, but
Yeah.
yeah.
Well, so we are in, middle of May
Yeah.
of 2022, and interest rates are clearly higher than they were this time last year.
Yes.
And a lot of things that I hear from buyers is that prices are too high and now interest rates are too high. But we are foreseeing interest rates could potentially increase even more, right? So you
Yes.
don't necessarily want to wait.
You do not want to wait. And I'm going to show you a quick, I'm going to share my screen really quick so people can kind of get an idea of what the market's been, right? So especially, if you're a first-time home buyer and you don't know the history of interest rates. So this is the average 30-year fixed mortgage rate over the past 39 years, right?
Okay.
So you could see, just if you go down at the bottom of the screen here, from 1982, right, 16%. So I started doing mortgages in 1997. So yeah, we were at I sold loans at 16% with 10 points back in the day. It was crazy, but you could see they've been high, right? I mean, in the last 2 years was an anomaly directly because of COVID. And so, but you could see here, where we're hitting 4% for the first time was in 2012, right? And then it's kind of stayed steady. And just right now, you can see the difference here, and this is kind of fun. You can kind of see the year that you were born and what rates were then. So when I was born, it was 9%. You were born, it was what?
It was in the tens.
Okay. So you're not giving your specific year. I love that. But so 10%, but you guys could just see, it's the average 30-year fixed rate. I mean, people were still buying homes in 1981 at 60.
Yeah, I feel like looking at this chart, our generation is spoiled with,
right.
Yeah.
Yeah. I mean, you have to look really in 1991 is when it kind of started to dip down. Right. But, people were still taking cash out for home improvements. They were still consolidating debt. I mean, interest rates on credit cards are 22%, and people don't have a problem racking up 20, 30 grand.
Problem. Yeah.
Right? And a mortgage where you could get a tax deduction on the interest and build wealth and build equity. If it hits 6%, the world is over. So I just try and put it into perspective. I never talk about rate. I talk about payment and affordability.
Yeah.
Right. And I know you do the same. So it's hey, Mr. Customer, what is your payment that you want to make monthly? Okay. No more than $5,000. Let me work backwards to the sales price based on the rate. And even if the rate's 30%, you're still affording the payment that you want. Right. Yeah. So again, it was just an anomaly because of COVID. I mean, they are projecting for rates to still increase. I just want to show you this is really crazy to me when we looked at this, but we got this, the source is Freddie Mac, right? So it's real information. So as of January 6th, the average interest rate was at 3.22% on a 30-year fixed. That would give you a monthly payment. We used $4,000 across the board of principal and interest. Okay. So you, not including taxes or insurance. So a $4,000 payment would get someone a house at $922,000. And you can see look how rates changed just in the month of January, right? Every time I woke up, I was had a small heart attack. Okay. So you're seeing, you're going April. So in April, it went to a little 5.1%. It dropped almost $200,000 in buying power for the same payment. And now you look as of today, 1 month later, we're up another 0.5%, right? And everybody's heard the Fed raised rates. So now you're at about 686 with a principal and interest payment of 4,000.
Yeah.
Right. And you have to add taxes.
How would you, and so 686, we're right on the cusp there of the loan limits, here where I am in Riverside County.
Yeah.
That's with a 5% down payment. Yep. Now, obviously, with more down, you have a little bit more purchasing power and so on.
Absolutely. I mean, and that's the other thing we're going to talk about is the really good thing and why it's so, the market, the bubble's not bursting is because they're coming out with new products. Right. Yeah. So adjustable rate mortgages now are going to be a little bit more prevalent than they were. And an ARM loan, if you're in the right situation, is still a decent loan. If you look at the history of people and how they turn their mortgages over, right? 2 years, 3 years, 5 years, if you can get something fixed for 7 years or 10 years at a better interest rate, you're going to still have that security, but be able to lock in at a lower rate and at any point in time can refinance, right? So if rates drop, you can refi.
Yeah. So for some of our audience members that might not know what that is, what an ARM loan is, can you just elaborate, like go to like a loan 101 a little bit and explain that versus a 30-year fixed?
Yeah. So an ARM stands for adjustable rate mortgage. And there's different terms. It could be a 5-1 ARM means that it's fixed for the first 5 years that you have the loan. And then after 5 years is up, you could either have it adjust, depending on the loan you lock in on, you could have it adjust every 6 months or every 1 year. Okay. At every adjustment, there will be a certain percentage maximum that it can adjust. And then there will also be a lifetime cap over the life of the loan. So, so you can choose to have a 5-year fixed loan, a 7-year fixed loan, or a 10-year fixed loan, depending on what your goal is for the home. So a 5-year will, because it's a shorter term, will always have a little bit better pricing. But right now we're looking at ARM loans and fixed loans and showing both to the customer so they can just make an educated decision on what works best for them. Because sometimes the rate could be, you know, 0.5% less, or we could fit them into a jumbo ARM program, even though their loan amount isn't jumbo, right? So there's so many variations that we just see, like, what is the best product for what they qualify for.
And obviously you talk about the advantages and disadvantages of both, case by case.
We have to, I mean, we have to educate them, you know, hey, if it adjusts every year, this is what the adjustment could be. You know, after your 7 years, if you don't refinance, there are no prepayment penalties on, they're called agency loans, right? Which are your traditional mortgage loans. So, you know, so in 4 years from now, if rates get back to where they were, you could refi out of it. Now, after 7 years, you know, you just want to make sure your credit's still in good standing, right? You still have the ability to refi, but that's really what a good loan officer will do is educate and just make sure people, you know what their options are and what's right for them.
Absolutely.
So those are coming back for sure. While we're talking about rates, I think I'm going to get into some programs, but I know that we talked about something that you're kind of hearing around town about this special like loan or special product. Do you want to ask me about it?
This California HFA, the 10% down payment assistance, if you will, but the forgiven 10%. So that's kind of a new thing that everybody's talking about. Obviously, I know that it only applies to a very small handful of home buyers out there or prospective home buyers. But since you are, you know, the money guy, the money girl, can you tell me a little bit more about that? And let's just kind of bring that to perspective for some people.
Yeah. So so it's a completely different type of product. So you could either do it as an FHA or a conventional loan. And basically we do the first mortgage, right? And what's happening is you're getting the assistance in the form of, you know, like a grant or a second mortgage of money that you don't have to pay back as long as you stay in the house for 5 years. So if you sell the house in 2 years, you're going to pay 2 years worth of, you're going to pay 3 years worth of that money back, right? Basically you're going to pay 60% of whatever you borrowed because you're supposed to have 20% per year. Yeah. So FICO scores on FHA is at about a 640 FICO, conventional is a 680. The thing that we have to be really careful of is every single county has a different loan limit. So we have to look up what county they're buying in, what the maximum loan limit is, and then the maximum income limit that's set. And you have to be under a certain percentage of the average median income of that county. So it's a lot. I mean, when I talk to someone that's asking about that, it's like we dig in, we go through all their stuff up front, and we make sure that they'll really qualify. There also is usually a cost to the program, so you're not getting the full 10%. So there's some caveats to it, but we have it. We have it. If someone asks you about it, make sure you let them know that it's a program that we can offer.
But I feel like you have your buyers here, right? And you have all of these qualifications. And then if someone says, well, I want the down payment assistance, really it shrinks because of all the little qualifications that are needed for that. And then it also really shrinks your purchasing power too. There's so many homes that you'd be able to qualify for. Sorry for all that.
No, that's okay. Yeah, because like on a traditional mortgage, and honestly, I think the rate we looked up, so I think we were at like 5.75 the other day on that product, where that's about where traditional mortgages are right now. The assistance is great, of course, but yeah, you have to not only qualify with income, but with debt ratio, and then finding a house in that price point. Unfortunately, sometimes in our markets, you know, in your county and in San Diego or Riverside County, Corona, it's just tough just because of the price points right now. But we have it. We'll always look for it for someone if they qualify. I wanted to talk to you too about a couple of other really cool new products that have come out recently. So have you ever heard of a bank statement loan?
Yes, I have.
Okay. So usually you need 12 months of bank statements or 24 months. So we have an investor that will allow only 3 months of bank statements. They'll use it either your personal or your business. And then the cool thing is they allow transfers even to be used as qualifying income. So transfers in or deposits. The big thing about this is getting the 3 months of statements up front. They'll cash flow the monthly income so that we know what we're working with the full application. But if you look, you can go up to $3 million loan amounts. Okay. A 75% max loan to value. So you do have to have some money in the bank, obviously, to put down. You can do owner occupied, and you only need a 675 FICO. And this is
bank statement loans are meant for self-employment only, right?
They are.
Okay.
Yeah. So it's known that people that are self-employed generally with their tax returns have their gross income and their expenses and then their net income, right? Yeah. And usually, well, all the time as a lender, we have to use their net. And so we know that they make the money, right? It's just that they have certain expenses that they write off. So this is great for someone. Now, this is called a non-QM loan or non-qualified mortgage. So on these products I'm going to talk about, you're going to look at higher than market rates, right? But they're for people that wouldn't get a loan otherwise. Yeah. So, you know, until the self-employed person maybe gets their taxes in order, or maybe they run a cash business. I don't know. But this is out there for people.
That's great.
So that's pretty cool. This one I love too. There's a lot more people, especially in our areas, that are looking to become investors. So they're looking to buy non-owner occupied properties, right? That are either like short-term rentals. It could be a single family residence or a 2 to 4 unit. And this is no income, no job verification. Okay. What they do is they qualify off of what's called the Dscr. It's called the debt service coverage ratio. So what they'll do is we'll do an appraisal and we'll get a rent schedule, and we'll use the projected rents. And that has to be equal to or greater than what the new mortgage payment's going to be.
Okay.
So when you sit down with an investor, you know, you're going to want to make sure the property makes sense anyway for them to buy financially. So this is a great product that goes up to $2 million. You know, you're going to have, I think it's about 20% down, I remember correctly. And then if you don't have the debt service ratio at 100%, your loan to value goes down a little bit. So you can go from like 80 to 75. So again, investors usually have some cash, but it's like not documenting income or jobs or anything. You're just using the rent schedule.
Okay.
This is pretty cool. The third product that I was so excited about is it's Atr Ability To Repay.
Okay.
So we qualify someone with enough liquid assets to cover the loan balance. So you literally could get $1 million loan if you could document $1 million in assets. They don't have to be employed.
Interesting. Okay.
Okay. So it's people maybe have a ton of money, lost their job because of COVID. It's owner occupied only. You have to have a decent amount to put down, but we can go all the way down to a 600 credit score. And you only have to show 2 months of statements for the asset account. So assets are like checking, savings, IRAs. If you go into like a 401k, they'll take a percentage of that depending on your age. If you're of retirement age or not, they'll usually take like 50 or 60% of your vested balance. But there's a lot of people that have investments and money to document assets, but can't qualify with income. So this I thought was cool too, because it's someone that like has like saved and invested, but just for whatever reason, they're either not working or they just can't prove their income. So
yeah,
this was pretty cool.
that is pretty cool. I might have a prospective client for this
Awesome.
program.
Yeah, so there are new things coming out all the time, and so I'm glad we had this call, because I think this is something we're going to do weekly, right? I think
Weekly, yeah. So for our whole audience, we're going to just jump on weekly, do a short call like this,
Yeah.
and just kind of talk about the market, talk about mortgages, talk about any tools that we have in our tool belt to kind of help the general public when it comes to anything real estate.
Yeah.
I know on our docket for next week, we're going to talk about HomeBot.
Woo!
Amazing tool. So stay tuned for next week. And then, really my goal, Tracie, is to answer our audience's questions. So as we start doing these videos more, really just to educate everybody who's out there looking, interested, just curious about the real estate market, you all can pop by with DMs of questions, and that way Tracie and I can address those week to week.
Yeah. And then for you, like, how do you, because I know you're everywhere and you're all over and you're dropping off, what's the value of your home and everything in that market, but like, how do you suggest that people get in touch with you best?
So definitely they can reach out to me via email, text, or call.
Okay.
And, we have our phone numbers listed. Same with you, Tracie, or they can go to my website, which is heatherjoneshomes.com.
Okay.
They can contact me there.
That has a good ring to it. heatherjoneshomes.com.
See?
Awesome. And Heather's so great. I mean, if you haven't worked with her, her energy is amazing. You go to bat for your clients. You're knowledgeable. Your marketing is on point. So I'm so glad that we've connected and that we're kind of partnering together a little bit and doing this stuff. HomeBot is so amazing. So watch next week. It's a great free tool for home buyers and home sellers. We'll do a little demo on it and show you around, and you can easily sign up for it and message us if you have any questions in the meantime. So
yeah, and definitely, I know, Tracie, you come with years and years of knowledge and experience and expertise. So I'm grateful for that. I'm grateful for your friendship and partnership. And to be honest, I love what I do. I love helping my clients and families and investors and home sellers, home buyers, whatever it is. I just really enjoy what I do. So I'm grateful for this.
And your kids didn't come in as we were recording.
My kids did not come in. The smackdown.
A reward or something. So, well, thank you for listening. It's a little bit of a longer video, but we just try to give as much information as possible. And we hope to see you next week.
Absolutely. Awesome. We'll see you next week.
Thank you.
Okay.
Bye.
Bye.